Death and taxes. Ugh, what an awful conversation, but we all have to have it. So let's focus on the fun parts. How do we save money on taxes? One of the biggest questions that always comes up. LLC, S-Corp. Let's talk about it. Let's figure out what's going to work best for you. So Adam always asks me every single year, will you please come do this? I'm like, sure, be happy to. What do you want me to talk about? What do people ask questions about? A lot. What do people ask questions about the most? Oh, can I take this deduction? Is this taxable income? He's like, for business owners though. Oh, well, I'm an LLC. Should I be an S-Corp? Oh, okay. Well, that seems like a pretty good topic. There are a lot of small business owners that hear the talk about S-Corp and can I save money by doing it and how is this going to work? But they try to bypass all of the stuff beforehand. So decisions that have to be made. So the first thing that we're going to talk about is flexibility. Flexibility. So you're in an LLC. First question, are you single member or are there more than one? Meaning there's multiple members. Because that's going to dictate how you're taxed, right? If you're a single member LLC, you can put just about anything in an LLC. I can put my house in an LLC if I want. Doesn't mean I have to file a tax return for it. Did it generate any income? I wish. It might help pay the mortgage. But the reality is a single member LLC, what the IRS says is, look, we get it. You're registered with your Secretary of State as an LLC, but we are going to disregard your entity for tax filing purposes. So you're basically a sole proprietor. You're going to file a Schedule C. If you're, got a retail shop downtown or you're doing consulting, you're going to file Schedule F if you're a farmer. You're going to file Schedule E if it's on a rental property. It all gets connected to your 1040. Okay, so real simple. One tax return, just an extra schedule that gets added. You got multiple members. Well, now you got lots of opportunities. By default, if you have more than one member, so we'll just start with two, make it simple, you're a partnership. You're only not a partnership if you elect not to be. Well, what does that mean? LLC. So we got single member, we got partnership.
Is married couple partnership?
That's a great question. So we're in a community property state in Washington, so husband and wife get the election. They can be treated as one or as multiple. So you get to choose. And if you choose multiple, obviously the IRS is thinking, this is what you're going to file. But you can always elect back out of it and say, no, we're married. We're a single member. So you've got some flexibility there. Okay, single member, partnership, C-Corp, S-Corp, trust association, which can include nonprofits as well as trusts. Holy cow. Like I basically made almost every single type of entity I can, and it all started from an LLC. Flexibility. Who manages an LLC? The managing member. It's pretty straightforward, pretty simple. How do I report it? We already talked about this one's on a 1040. This one's on a 1065. It's a partnership return. C-Corp has an 1120, separate tax return. S-Corp has an 1120S, separate tax return. Trusts and associations, separate tax return, just depends on what it is. All right, so you've got all of this flexibility. You can do all sorts of things. If I've got multiple members, I can decide how I want the income to be allocated. Wow, that's pretty cool. What if we're 50-50 and I want my partner to get 75% of the income because it's going to be better for me tax-wise if we do that? Okay, have it drafted in your operating agreement. You can do that. Flexibility. What about an S-Corp? What if I go, hey, we're going to go from here down here to the S because I heard that I can save money by doing this. Okay. Maybe you can, maybe you can't. It's all depending on the set of circumstances. Don't you love that answer? They taught you this in college, and if you didn't go to college, that's okay. They didn't teach us a whole lot for the $60,000 that we spent to get our piece of paper on the wall, other than the answer to everything is, it depends. Great, I'm glad that I spent a lot of money or mom and dad's money for this, but this is where we're at. So, am I going to save money? We'll get to that in a second. Flexibility. I said with an LLC, the managing member manages it. I can make the managing member me, and I don't own your LLC. I have zero ownership in your LLC, but you can make me the manager. You own farmland outside of town, it's 300 acres, you have 4 siblings, and none of you can get along. So you're pretty sure that this whole thing is not going to work out well and you're going to have to sell the 300 acres, which if mom and dad were alive, they would probably kill you. So instead of killing each other, you decide, hey, what if we go get a manager who will manage all of this and give us numbers and give us checks once a year, and we all get our share of the pie, but we never get rid of the 300 acres. Oh, well, how are we going to do that? Well, we're going to set up an LLC. The farmland is going to be contributed to the LLC, and then we're going to make somebody, I'm choosing me because I can get paid to do this, to manage this. What if I'm in an S-Corp? What if I make this election and I go this way? Nope, not allowed. You have to be an owner, you have to be an officer of the corporation. Okay, so I'm losing some of my flexibility, but Tim, I don't want you running my company. So I haven't lost anything. Oh, but wait! Remember I said that you could do that fun stuff about shifting income, and it didn't matter if it was 50-50, you could go 75-25 off of your gain? Can't do that. You're 50-50. You no longer own units in an LLC, you own shares of stock in an S-Corp. You own 50%, that means you get 50% of the income and 50% of the loss. Everything has to be equalized. And if it's not, then you get into this real tricky part of the tax code that says S-Corps aren't allowed to have 2 classes of stock. So if we really wanted to get down in the nuts and bolts and get down into the weeds, all those companies like Microsoft that you can invest in on the stock market, they have multiple classes of stock. They have preferred shares for people like Warren Buffett to come in and buy, people that have buku bucks. And then they have like C or D shares for the rest of us that buy common stock at $400 a share. That's a second class of stock. It's actually like the 4th class of stock. You cannot do that in an S-Corp. If you do it, you're immediately, automatically dissolved. Well, that is the pits, and it doesn't help, because then there's going to be tax consequences that come from that, right? So who wants that to happen? What about when I have money inside of this thing? I've made money, and I want to get money out of it. Can I just pay myself? Kind of. As an LLC, you're a member. You're not an employee. You don't get a W-2 for the work that you put in. You take draws. Or if you have multiple members, there's this fancy smancy word that we use, guaranteed payments. We guarantee that you are going to get at least $30,000 a year. Anything in excess of that will be based off of our ownership percentage or our operating agreement and how it gets divvied out through distributions. Okay, cool. What about the S-Corp? Don't let the S confuse you. It's still a corporation. It means it's a separate entity. It means I'm sitting there and the corporation is sitting here. We are 2 separate entities. But I own that. Yes, you own it, and you're also an employee of it. You have to get paid. You have to get a W-2. So there's more administrative burden upon you than you would have necessarily had if you're an LLC. Now, you're probably saying, Tim, I already have employees. Like, what difference does it make? Well, the simple answer is it costs something. But there's this nice term in the tax code about reasonable compensation. LLCs don't have that definition. The guaranteed payment is not necessary. It is not required. Ooh, Well, what's reasonable? I don't know, let's do an example. Okay, you're an S-Corp. Heck, you were an LLC and you elected to be taxed as an S-Corp. That happens a lot. Why does it happen a lot? Because we're going to go there first and foremost, every single time. Unless we know something before we get to that point. The majority of the time we're going to LLC because we get flexibility. We're not getting you trapped into a corporation, which is kind of top of the food pyramid when it comes to entity selection. I like having flexibility. If your income is not high enough and we can control your tax situation better with the LLC, well then I never had to do this. I never had to do the S-Corp. It gives me the opportunity down the road to make that selection later on if it's beneficial, or at least advise you on whether it would be beneficial in your set of circumstances. But we're fast forwarding a little bit. You already selected to be an S-Corp. Okay. NI for net income. After expenses, let's say you make 50K. You do consulting, you make $50,000, you have taken into account all of your tax deductions, depreciation, your cell phone, your internet, your business use of home, your supplies, your repairs, your mileage. You go down the list and you're like, I've exhausted every possible deduction other than cheating and taking personal expenses I'm not allowed to, and I got 50K. I haven't paid myself yet. What's reasonable? What do you do for a living? Where do you do it? The region makes a difference, because if you're in California, let's say in Anaheim, versus in Pullman, Washington, pretty sure you get paid a completely different base. So that goes into the calculation. It's important. What's minimum wage right now? It's $16.28. It's going to go up to like, what, $16.69, I think? So on 2,080 hours a year, that's roughly $34,000, $35,000. You're going to tell me you run a business, you do all the extra work, and you can't make minimum wage? I don't think I can defend that, but congratulations when you go to your audit by yourself. So maybe you convince yourself that 40 is reasonable. That's stretching it, but okay, sure. Okay, my net income just went down to 10,000. I'm ignoring payroll taxes, by the way. Forgive me. You can, but eventually they're going to come put chains on your doors, and they're not going to let you do your business. Before you were an LLC, and I'm going to make this real simple and say you were single member, you had $50,000 that showed up on a Schedule C. You provided consultation services. No, let's be fun. You are an interior decorator. It's still services, but that sounds way more fun. You're not in front of a computer all day. There's a reason why I wear these. You were going to have $50,000 on your tax return. Now, you're going to have $40,000 on a W-2, which most people understand what the W-2 means, and $10,000 coming from your S-Corp. S-Corps, if you're not familiar, have what's called a K-1. And I want you to think of the K-1 almost like the business giving you a separate type of W-2 that says this is how much your income is, these are your types of income, or special tax deductions that are going to flow through onto your 1040. Okay? End result, 40 and 10 versus one number at 50. It's the same numbers. Why in the world would anybody want to do an S-Corp? This doesn't make any sense to me. Like, it's the same, 50 is 50. When I'm on a Schedule C at $50,000, this is not only subject to ordinary income tax, it's subject to self-employment tax, because no one has paid my Social Security or Medicare tax for me. And to make it a little less nice, self-employment tax, you do get half of the deduction back, right? How many people understand how, like when you get a W-2, you've got a little more than 7.5% that comes out for your Social Security and Medicare taxes. the employer has to match that. So it's really roughly 15%. It's 15.3, but we're not going to get into the semantics. So 50,000 at 7.5%. Who can do the math for me? 10% is less than 5. So 4,000, 3,800. This is what's coming out of your paycheck for sure, 3,800 bucks. But if you're the employee and the employer, I gotta pay both sides. Ugh. When I hit my tax return, if it's a Schedule C, I have to pay this. I get this as a tax deduction. This tax deduction is not dollar for dollar. I don't come out of this equation by saying, hey, I only paid 3,800 bucks. No, this $3,800 deduction is only beneficial based off of whatever tax bracket I'm in. So if I'm in a really high tax bracket, I get a bigger benefit than if I'm in the 12% tax bracket, I don't get as much. So the general consensus is it's roughly around 10% is really what I end up paying after the deduction, as opposed to 7.5% when I was not self-employed. So I'm literally paying more. That's why people jump into the S-Corp, because they go, hey, 40,000 bucks, I just controlled, I dictated what was going to be subject to Social Security and Medicare tax. I dictated this calculation, but at a lower number. Okay, in layman's terms, if I take this number and I make it lower, of course I'm saving money because I'm paying less in Social Security and Medicare tax. But 5 minutes ago, you just said I had to pay tax on the 50,000, so where'd the other 10 go? What happened to that? I told you it came through on a K1. And you're like, so, okay, what's that mean? It's still subject to ordinary tax, just not self-employment tax. Oh, so this number is the number everybody talks about. This is where I'm saving my money. I'm spending less in Social Security and Medicare. Okay. Well, Tim, that looks like a really good deal. Yeah, if you want to be incredibly aggressive and say that you're only worth $40,000 a year, and if you had to defend that in an audit, and they said, okay, so you hire someone else to do this job. How much would they require you to pay them to do it? Oh, I don't know if I could get somebody for $40,000 a year, or if I did, I'm not sure they would care enough to actually take the time and the presence to do this the way that I do it. They might require 60, but I don't have 60. I only made 50. Quite the conundrum. One of the main reasons that we don't suggest people go into S-Corps in most scenarios at this level of income. It's going to be really hard to come up with a reasonable salary and not eat up the entire net income, especially if it's only you. Now, if you've got 5 employees that are helping generate some of this number, then maybe you have an argument, but I still think it's going to be tough. Where this gets a lot easier, now I make twice the amount of income. I make 100K. Ooh. Really hard to defend that 75 is not reasonable. Heck, that might even be high. 60 might be reasonable still. Now I have more money than I'm not paying Social Security and Medicare tax off of. This is why people want to do S-Corps. Now, people jump into these things and they anticipate, this is what I'm going to make. And the first error that I see is that. You don't know you're going to make that until you make it. You're hoping that you're going to make that. When you make it in an LLC and you get hit with the tax, yeah, it hurts, but then you start to recognize, oh, I know I'm going to make X amount of dollars. It makes it a lot simpler to make this jump versus you're making the jump on hope, on a whim. And too many times I have seen people that jump over to the S-Corp, they don't make what they think they were going to make. They don't have a positive number. One of the complexities inside of a corporation is I'm only allowed to deduct up to the point of my basis in that investment. if I invest $10,000 into this company and I lose $20,000, I'm only allowed to deduct $10,000. The other 10 is just suspended. I don't have any basis in that investment. This is kind of pointless. Versus if I'd been in a single member LLC, it's taxed like a sole proprietor, I take the whole $20,000 loss against my other income on the tax return and get full 100% tax benefit. So when you're losing money, S-Corps suck. When you're making money, man, they can be great. Now, you get into some interesting stuff with people where they start getting some good numbers.
Can you, if things were within reason, can't you just add the $10,000 as reimbursable of employee expenses to yourself?
If you have the expenses, sure. Yeah, so let's...
How do you delineate, like even just mileage, right? Like mileage versus the gas. Can I reimburse the gas and then get the mileage off?
So, okay, let's take auto, because auto is a great one. All of us understand auto. So, who owns the automobile? You or your business? Okay, so you own it, not your business. Did you make the jump over into the S-Corp? So you're an LLC taxed as an S-Corp?
In this scenario, yes.
Okay. Scenario is owner has elected to be taxed as an S-Corp, has made $50,000, is going to pay themselves $40,000, so they have the $10,000 left. The question is can we come up with other deductions to offset that $10,000, like reimbursements for mileage? If the company, the corporation, does not own the vehicle, then yes, you can track mileage and do the mileage reimbursement rate. Did you, underneath the set of circumstances, let's assume that you have 16 or 17,000 miles, so it's like the entirety of your 10,000 that was left. Now you're left with a net income of 0 and 40,000 on a W-2. Did you gain anything by going to the S-Corp? Because your net would have been 40 under either scenario, right? Like I was going to have the 10,000 one way versus the other. It's a semantics issue of what tax return it shows up on. So my net has now become 40. If I put it on a W-2, paying Social Security and Medicare tax. If I put it on Schedule C, I'm paying Social Security and Medicare tax. Do you save a little bit with this as opposed to self-employment tax? Maybe. We're splitting hairs a little bit there. But here's a couple of things that people don't factor in. I have to administer that, right? What does that mean? Payroll taxes, payroll reporting, 1120S, tax return, on top of my 1040. So when people come in and they go, I don't know how to do payroll. Well, you better figure it out real quick, or you're gonna have to hire somebody else to do it. Okay, what if I miss payroll taxes and I'm not timely? Oh, well then there's these things called penalties, and based off of how much you owe, they get bigger. And they're really not very fun. And you don't like those letters from the IRS, I promise. Oh, well, okay. Do I have to pay state unemployment, workers' comp, paid family medical leave, and Washington Cares? Well, the answer in general is yes. But if it's just you and you're the officer, you can be exempt from state unemployment. You have to opt in. You can be exempt from labor and industries. You have to opt in. You are, as an LLC taxed as an S-Corp, you're able to bypass paid family medical leave because an LLC member is not subject. It's one of the little tidbits that's underneath. You're like, I'm an S-Corp. Not according to the state of Washington, you're an LLC. The IRS has only recognized you to be taxed as an S-Corp. You are not theoretically an S-Corp in any other way, shape, or form. But because we're doing all this for tax purposes, And what about Washington Cares? Well, did you claim the exemption? Did you qualify for one? Because if you did, it doesn't matter what entity you're in, you're just not going to pay it. So if it's just you're a sole shareholder, then you don't have a bunch of the state unemployment, state workers' comp, and so forth, because you're not subject to it. But the moment you hire one employee, you are. And now this just went up, and this just went up, and this just went up. I haven't even got to the tax return yet. Oh, well, Tim, you're expensive. I hate to break it to you. I like you. You're a nice guy, but you charge a lot, and it makes me want to throw up sometimes. So, I'm happy to pay you for this one. How much is that going to cost? Well, if the base starts at like $675 or $700, and I haven't even got to any other forms, I'm probably going to say, assuming I have to do minimal bookkeeping to get this books ready, $1,000, $1,100, $1,200. Oh, okay. Well, what if I want you guys to do my payroll and my payroll reporting? Probably another $3,000 to $4,000 if you have all the other state taxes that you have to file. Oh, okay. So I'm going to spend $5,000 to get this done. Is my 1040 going to get cheaper? Well, yeah, your reports are now over here, so this has become a really simple tax return. Oh, okay, thank God, I'm saving money somewhere. Like if this was back to this issue of 100,000, and we said you were going to pay yourself 75 and 25,000 was your savings from self-employment tax. Let's see, 25,000 at 15%. I think that's right around that same number, about $3,800, give or take. I could be wrong, but if that's the case, I haven't covered the cost to administer it. I got close. And in some cases, maybe I have, but it kind of broke even, right? So the moment that people can start doing these things on their own, or they go through a Gusto, or they're doing some other type of external third-party resource to help them with it, it still comes at a cost. But when they're doing that, they're cutting that cost out and they're only looking at the tax return. At which point they're saying, look, I was going to have to pay that anyhow, so in some ways it becomes a sunk cost. And it's small enough in comparison to the savings that I have, then maybe it makes sense to do this.
Tim, would you repeat what you said about if the business lost money, the difference between LLC and S-Corp? Because I missed it.
Go back to your 50,000. You went to an S-Corp, and instead of being aggressive, you said, no, I'm going to pay myself a reasonable salary of $75,000. I've now lost $25,000 on my books. Now, how did I fund that? That's the question. I said I only put in 10. Well, in order to make the rest of it work, I must have gotten a loan. I have a loan on the books now for $15,000. Now I have debt just so I could pay myself. Oh, gosh. Who's the debt to? Well, it's to me. Did you loan that back to your business? Well, no, I contributed it. Okay, you made the contribution, so now you can take your full $25,000 loss. Debt becomes a real big pickle for a lot of LLCs versus S-Corps, because they'll come in and they're like, okay, you never said that I had any problem taking more money out in an LLC. That's because basis is tracked differently in a partnership than it is in an S-Corp. And then their eyes gloss over and they give you the deer in the headlights look like, I don't understand what you just said to me. Okay, layman's terms. I get to use whatever money you put in, take out any money and subtract it, take any income or loss, add all those together, that's now your basis. But in an LLC, I get to use debt because you're signing off on the debt. You're personally liable for that debt. So that increases it. And in an S-Corp, it does not. Okay, so I can take out money because I'm taking out debt and it's not going to hurt me. But in an S-Corp, it's not always the case. Where we see this really go upside down for a lot of folks in S-Corps is they go buy a nice big pickup truck for $85,000, no, $115,000, we're going to get it loaded. And now I'm going to take it and offset all my money and then some. Well, on the books, I have $115,000 and it's going to reduce my basis to zero, and any excess beyond that gets suspended for later years. Versus if I was in a single member LLC, I take that loss, put it on my tax return, and then if I have a spouse that has a W-2, or maybe I have a W-2 from working at WSU part-time or Schweitzer or whatnot, they offset. Now all of a sudden I'm getting a big refund versus I have a big goose egg on my tax return and I have all these extra forms that I don't understand because somebody has to track that carryover.
So would you say that start with an LLC and then when you get to the point where you can start seeing higher revenues for a steady period, then move to S-Corp because you could always switch to S-Corp?
I just checked a return yesterday that has $65,000 in net income. And I went back over and I said, hey, have you guys had the discussion about where you're at in the progression of potentially choosing to be an S-Corp? Yeah, but next year we're already anticipating this depreciation deduction, and then we've already got this sitting on the books that's going to, release, and so we don't want to make that election yet. We want that income to be low, and then in 2026 we'll look at this again. Because if the income stays fairly consistent, and all of a sudden the only thing that's changing is the deductions, we can start, planning for it. Versus the person who comes in and says, Tim, I got the greatest idea in the world. Nobody else does this. I'm like, oh, really? Yeah, we're gonna sell pizzas and get them to you in 15 minutes, guaranteed. Get out of my office. Are you kidding me? Seriously? It's called Domino's and that doesn't work anymore. You are an IT specialist. You understand software really well. So much, in fact, that people in big metropolitan areas are willing to pay you $400 an hour for your consultation. You're an expert. After all of your expenses, you generate $400,000. Man, I want this job. I get to stay home with my dogs. I Zoom with people every now and again, and I make $400K? Oh, I want that job. Reasonable salary, 75. What would the big tech firm probably pay you? Probably 150. Maybe 175, but we'll say 150. $250,000, $250,000. The first thing people say when they look at this, they're like, well, that's a no-brainer. That's a lot of money not to pay Social Security and Medicare tax on. They fail to recognize that Social Security has wage base. This next year, it's only like 176. I think right now it's 168.4. I'm almost there. So I'm saving a little bit of Social Security, but most of what I'm saving is Medicare tax. It doesn't make this less provocative. It's just not quite as sexy as it was when these numbers were smaller. When, hey, I'm saving Social Security and Medicare, not just Medicare. So, things to think about. There are other avenues though. Okay, so I will start looking at, what do you do for a living? This person has computers, a desk, minimal assets that within 5 to 7 years are going to be fully depreciated and not carry a whole lot of value. I'd like that in an S-Corp. Why? Well, while I'm saving this money now, I have to think about way over here in the future too. Someday that person's going to close their shop, they're going to retire, and something like this, it's not something that they're going to be able to sell to somebody. Not really. You can't sell your expertise, not to the next person showing up. They have to gain that expertise and be able to do it, at which point they're not buying it from you. if they have a bunch of assets, fixed assets that carry value, when I close out a corporation, I either have to sell those assets, meaning I'm going to sell them and have money that's taxable gain, or I'm going to take them for myself, which is the same thing. But when I sell them, I have to sell them at the fair market value on that day. That's the only way that I get it out. I have to pay tax on it. An S-Corp is just like a C-Corp that way. Once it's in, there ain't no just taking it out whenever I want. That's going to come with the tax consequence. It goes back to that first concept of flexibility. If I put a $115,000 truck into an LLC and then I want to take it out a year later, assuming that I have basis, I can do that without any tax consequence. I put it into an S-Corp and then 2 years later I get a partner, shareholder, mind you. Oh, well, I don't want to pay for your pickup. You got to get that out of here. Oh, well, it's still worth $75,000. Yep, you're going to be paying tax on $75,000 because you're taking it out. I'm not paying anything to do with your pickup. So you can kind of anticipate that some of these things could become ticking time bombs. When it's husband-wife or smaller, sole proprietors that have now switched over into an S-Corp setting, a little bit easier to manage that because you're not worried about how that's going to impact additional members of the firm. But that's a realistic problem that happens. And another issue, how long are you going to do this? Are you like 61 and you got 4 years left? So you're going to jump into this S-Corp, you're going to save taxes for 4 years, and then all of a sudden you're going to want to get out and there's going to be a tax consequence. Well, how much is that going to cost versus how much have I saved, and is it worth it? I can't tell you how many times I've had those conversations with attorneys. Tim, we got to do this. I am advising these clients to go into this corporation. Well, hang on a second. They're like almost Social Security age. Why are we going into a corporation now as opposed to like 30 years ago? Well, I didn't know him 30 years ago. Well, that's not my problem. Like, you're supposed to be helping them, but really what it almost seems like it's skewed to is it's helping you because then you can draft all these documents that cost thousands of dollars. They don't usually call me back after I say that. Who knows what LLC stands for? Limited liability company. I've had some people, and I have to admit, when I first started as just like a cub accountant, I thought this meant limited liability corporation, which it's not. You have to go through the corporation entity unit of the Secretary of State to file for an LLC. So it's understandable why somebody, even myself as a right out of college graduate, would think that that C stood for corporation, but it's limited liability company. Okay, great. Limited liability, what does that mean? Somebody sues your company, and are they able to come after your house, your car, your other personal assets? Generally, the idea is no. If they can prove that you had personal negligence, well then, sorry. That's on to the attorney that I already ticked off earlier. Don't involve me in that conversation, it won't go well. What about an S-Corp? It's got limited liability as well. It's its own separate entity. So of course it has limited liability, which is why when you go to the bank and say, yes, I'd like to take out a loan for that $115,000 pickup, and they go, okay, great, we'd be happy to give it to you. No, I want to take it out in my company name. I'm not really sure that we can do that, because if it's limited liability and your company doesn't make it in a year, how do we know that you're going to pay that debt? We might be willing to do it, depending on the bank, if you personally guarantee it. At which point it's like, well, there goes your limited liability on that. It's you've signed up to be personally liable for that debt. And that happens a lot. When I see people with rental houses, we're looking at LLCs. Limited liability protection. What's the LLC really supposed to be meant for? It's supposed to be like a holding company. Hey, I put my investments in there so that I can protect them. I put my house in there. I put a rental house in there. It's to protect that property. Makes sense. Some people will put personal property, like a bunch of farm assets and whatnot, separate from the actual land and farm. Okay, great. So you've segregated it for liability purposes. What's the purpose of the S-Corp? Save self-employment tax. That's literally it. Back in like the 70s, I believe, so many people had been going between partnerships. And back in those days, we didn't really talk about LLCs. It was general or limited partnerships and C-Corps. Those were your options. So people started shifting, and then they were complaining about like, well, I'd like the fact that I can pay less tax in the corp, but I don't like the fact that I don't have the flexibility of what I had in the partnership. I wish there was an in-between. So they kind of found that in-between with the S-Corp, and that's where these provisions came. And part of that was, oh, hey, how do we abuse the tax law in a legal way? We save on self-employment tax. Now, if you asked me and you said, okay, Tim, you're in this scenario, you saved $20,000 in Social Security and $270,000 on Medicare tax, what would you do with those savings? Make sure you're funding a retirement, because Social Security was supposed to be your retirement and you literally just took it out of that. Yes. Why are you not doing it? If this is me, why am I not doing a solo 401k or a SEP IRA to try to maximize the value? Like people will go, oh, well, I have a simple because, well, I can get a bunch of money in there. I can get investment from my employees who want to save, and my company will match 3%, assuming that the employee contributes at least 3%. Okay, great. What's the limit on that? I don't know, $16,000, $17,000, $18,000 a year. Okay. What if you did a SEP? Well, what's a SEP? Well, a SEP's based off of a percentage. Oh. What's the max percentage? 25%? Oh. But if you choose 25%, you have to do it for all eligible employees. Oh, I'm not really interested in paying for all of my employees' retirement too. So just calm down, Tim. This guy doesn't have any employees. He is the employee. His SEP is not based off of $400,000. If he was an LLC, single member, it would be. But there's a limit to cap out. But he's an S-Corp, so it's going to be based off of his wage. Well, 25% of $150,000, that's not terrible. But he could also do a solo 401k, where all of a sudden he gets to use this and that to benefit and max out that sucker at 60 grand in a year. Probably more. I think the defined contribution limits are $69,000 a year. So we've got a lot of opportunities when it comes to retirement plans. And that's where incorporating financial advisors who can start actually having oversight, or if they don't want to use a financial advisor, fine. Go set up an account at Vanguard. Go set up an account at Schwab, Fidelity, whoever you want to use. I don't care who the broker is. Almost every single broker I've ever come across will offer IRAs and company IRAs, simple or SEP, solo 401ks, 401k plans, without have more than one member and so on. So there's still opportunities here. Health insurance. Wow. Okay, how's health insurance work? Well, in an LLC, I don't get a deduction for it against my business income, but I do get to take a regular income tax deduction for being self-employed. So I'm still paying Social Security and Medicare tax on whatever I paid for medical. Okay. What about over on the S-Corp? The S-Corp can either pay for it directly or reimburse you. Because I know if you get an individual plan on the exchange, a lot of times they won't let your business pay for it directly because it's coming from a business account. They force you to have to pay it from a personal account, which then requires you to do a reimbursement. It shows up on the W-2. But then you qualify for the tax deduction of self-employed health insurance. So it's all a bunch of smoke and mirrors of moving this stuff around because I'm moving this number down, this number comes up, but then on my 1040 I get the deduction anyhow. So I'm not ever going to pay tax on it. I'm getting the deduction. And I'm never paying Social Security or Medicare tax on it. Ooh, I'm not paying Social Security and Medicare tax on it as an S-Corp, but I am underneath an LLC. Go figure, an S-Corp actually has a benefit for health insurance. Tim, I'm gonna do the SEP. I'm gonna go back to the retirement, I'm gonna do a SEP, and I'm gonna do it out of the S-Corp. Why did you choose the SEP? Because the company pays for the entire thing, and it qualifies for 100% deduction. And I don't have to pay Social Security or Medicare tax on a penny of that entire contribution. Oh, and you're paying for your health insurance out of the S-Corp too? Cool, you're not paying Social Security or Medicare tax on that either. So now we're within the confines of the law, taking advantage of significant tax savings. I'm spending $10,000 to $15,000 a year on health insurance. I'm probably spending another $30,000 or thereabouts on retirement. I've just saved $45,000, and I'm not paying Social Security or Medicare tax on any of it. And I'm reducing the bottom line, so I'm saving tax, which for this individual, they're at 400,000. So if we're saving 45, we're at 345. So we're just below, we're down in the higher end of the, no, you're not married. You're definitely in the 32% tax bracket, maybe 35 actually. That's pretty significant. I mean, the 37 is the top bracket. If you're paying 35, it's like, just figure it's the same. I haven't lost or gained anything. Cry me a river while you're doing it too, because 400,000 by yourself, like, you don't have much to complain about. Go down to the Humane Society and buy like every single cat and dog that they have because you can afford to feed them.
Tim, could you give an example of an LLC where it becomes a personal liability? I have a specific example, but I want to hear yours because you've seen some people that have gotten into that situation.
This is a tough one because this is more of a legal question, right? So I have to be I'm like bordering the line of what's accounting based versus what's legalese. Okay. LLC holds on to a rental property.
Yes.
I own the LLC, and the stairs that are on this nice little multiplex up on College Hill are built in 1952, and they look kind of like this. And some of them are shorter and some of them are taller. They're all over the place. I mean, 70 years of just wear and tear. And I call up CTI and say, hey, could you come and fix these stairs? How much would that cost? Can you give me a bid? And they go, oh yeah, sure, no problem. That'd be $5,000. I'm not paying $5,000. I know how to mix concrete. I'm gonna do it. Great. So I fix them. I'm an accountant by trade. I don't work in concrete every day. I'm just gonna put that out there. That should be clue number one to what are you doing? Resident comes out, slips on the ice, breaks their tailbone, and then severs their spine and can never walk again. I had to make it really bad. Who's liable? Who's negligent? Me. Who are they going to sue? They're going to sue my LLC. They're going to sue me. They're going to sue any other renter's insurance, my insurance policy. They're suing everybody. They're going to get whatever they can. And when that lawsuit comes back and they can't walk anymore for the rest of their lives and they're 20 years old, what were they going to school for? Well, they were going to be an accountant. Oh, God. Their future stream of income is God knows what. It could be millions of dollars. Yeah, see, they were going to make millions of dollars in 1 year. They were already on an NIL contract for $300,000 now. All of a sudden, everything changes because that one rental property doesn't have enough value to cover that. And the insurance company is going to go, your policy as a commercial policy is $500,000. They're suing you for like 10 million. We don't cover that. Do you have an umbrella policy? Oh gosh, what's that? Oh, I'm going to guess that's a no. So now you're really in trouble. That's where the LLC is like, okay, look, the LLC created a speed bump, but it doesn't get rid of the force that's driving behind it.